Good morning. Welcome back to the Retirement Report. I'm Hank Parrott, your host. All right, we've been talking about taxes this morning, and this is one of those areas when it comes to planning that we get into quite a bit. So when I have new clients come in, a big part of the initial planning that we're doing is, of course, about how to minimize taxes. And there's so many ways that taxes can impact you that we want to help you, of course, again. When we look at all the costs, when we look at whether it's investment income, how to minimize your taxes is so critical. And there are so many ways that that can be done, and so many ways that I see people overpay taxes simply because they don't understand how the rules work and just how you, like right now, it's a great time of year as an example, capital gains being one of those, okay? Someone takes capital gains this year, they could trigger taxes that, you know, on that capital gain that, let's say if they reduce down the amount, in particular, like as I say, this time of year, it's real easy. If we wanted to sell off some things, to sell some off here, and then in a couple of months in the new tax year, sell off some more and spread that taxing around. And that could be the difference between zero tax and maybe 15% tax on those gains. So that's something we're always looking at when we're making decisions about how to do your overall planning. For those of you that like to get a personalized plan, in fact, here's what we'll do. For the first 10 callers to my office this morning, there's the number on your screen, 615-376-5325. Tess is standing by to get your information. Here's what we're going to do. This is a free retirement income analysis, and by that I mean a comprehensive financial plan. We're going to show you what your financial future looks like based on the things you're doing today, what your taxes are going to look like. Guess what? At age 70 and a half, when you start taking those required minimum distributions, more taxes. That's taxable income. That's right. So do you know what that tax bite's going to be? Might it affect your Social Security benefit, cause them to be taxed where they're maybe not now? How about on the, again, getting into, when we talk about Roth conversions, doing them before then could be really beneficial, and it may be difficult to do them after, especially if it bumps you a bracket. Same thing with those RMDs and how it might affect capital gains taxes. It could cause you to bump up a bracket, and now you're paying capital gains tax on something that you otherwise may not have paid. Do you even know all these things or how it might affect you? Well, if you'd like to, 615-376-5325. First 10 callers. Tess is standing by. She'll get you information. She'll send you out a little packet, including a checklist of things to bring to your appointment with me. We will incorporate Dr. Friday into that planning. If you've got a tax person, I'll work with them. But I'll tell you, Dr. Friday's been doing my taxes now for 20 years, plus years. For quite a while.
I love to do that.
Payroll, all that kind of stuff. So yes, she helps a lot. When we get into planning with our clients, this is one of the things that we do, is we talk about, you know, how to in fact minimize taxes. So I'll run scenarios by her. I say, hey, can you run the taxes, you know, run a tax return for me, and let's see if we're triggering anything, or if we're, you know, if this is going to keep us where we want to be, make sure we don't miss anything. And that's very helpful so that we know what the effect's going to be of the actions before we take them. Exactly right. So again, if you're one of the first 10 callers to my office, we'll get you in for that appointment. And when you come in to see me, I'll also give you a free copy of my book, 7 Steps to Financial Freedom in Retirement. And I cover a lot of that planning stuff, including IRA mastery, how to minimize taxes on your retirement accounts. This is one of those areas, by the way, we're going to talk about more today, is how these tax bills are going to affect things. When you're putting money into those retirement plans, it's great that you're getting tax deferral and reducing taxes, but guess what? Time comes, you're going to start taking that money out, whether it's when you first retire as a need for income, or whether you're forced to. Exactly, it's 70 and a half, you know, sooner or later it's going to happen. And how are you planning with regard to minimizing taxes on those distributions? Think of it, if you've got $1 million that you've saved up, as an example, just to use nice round numbers, and you're only paying 10% tax on that, that's $100,000, compared to, say, paying 25 or 30% tax, right? $250,000 to $300,000. It's a huge difference in how much money you actually have.
Well, and I think people don't always realize, and you brought it up earlier, the fact is you have your Social Security, which could be completely tax-free if that's all that you have, but then you start doing conversions, or they have that mandate of RMD where you have to, now you're not only paying $1 for what you're taking out of your retirement, but you may be paying another tax on the Social Security. It could make both of them taxable theoretically and put you in a completely different tax bracket. We've had it happen many times. So yeah, controlling that, which you can do some control. There is.
This is one thing. Think of your tax, when you think of that, when you're looking at your retirement account, your 401k statement as an example, remember there's taxes going to have to be paid on that. All right, so you're thinking in terms of, you know, do I have a $500,000? Do I have $1 million? Or do I in fact have a lot less than that? Is it maybe $100,000 less or $200,000 less on that $500,000, or $200,000 to $400,000 on the million? Do I really only have 40 to 50% of what I think I do? Well, based on your tax planning, it's the difference between only having 40 or 50%, or maybe having 90% at least, or more. We had some clients that were able to,
I love that
basically take out money with almost zero tax, or in some instances actually some with zero tax. So it's all on your individual situation. If you want to learn how to do that, again, give us a call. But here's the, going into this, understanding how the new laws are affecting. I was mentioning under current law that we've got the standard, the standard deduction exemption. We just
personal exemption and the standard deduction, right?
Now under the new rule, they're doing away with exemptions, right?
Right, they're kind of consolidating the two. So when you're looking at the current tax law where you had the 23-3, they're looking at a standard family under the age of 65 would have about $24,000. That would normally be about $22,000. So they have a small step up in basis. Plus, there is another exemption for children over the age of 17. There'd be $300, and if they're under the age of 17, instead of the $1,000, you'd be getting $1,600. So, if there's children or people, this is also the $300 would be for parents. Maybe you're taking care of aging parents in your household. Any person or an older child that, because of divorce, had to move back in, they would get a little additional money to help offset that normal personal exemption that we had on the books before. And then of course the biggest thing is most people pretty much jump from the 15 to 25% relatively quickly in the prior tax code. Pretty much you're going to have the 10 and 15 and part of the 25 all going down to 12. Right. So they're moving the brackets around. So not only are you losing the personal exemption, but the fact is you're also reducing, in many cases, their taxable income almost in half the rates that you would normally be paying. Again, Hank went through the whole progressive, so it's not straight off, well, I was paying 15 and now I'm going to pay 7, but it is going to bring down the rates quite a bit, which should give people between the two, statistically, based on the information they're providing us, most people will be looking at a little bit more than $1,000 particularly in their pocket if you're in that standard 25% or less brackets. If you're above that, it may not be quite as much savings unless you're in a very high bracket.
Well, that's the thing. So right now we were talking, example was that $100,000 being approximately your break even for the 15%. So once you cross over that 100,000 for a couple over age 65, all right, once you cross over that 100,000, you're in, a little less actually, but you're into that 25% bracket. Under the new proposed legislation at this point, what just came through the House of Representatives, is going, that would raise it to about 114,000 before you went into that 25% bracket.
Yeah, 90,000 plus 24,000.
Exactly.
Whatever that, yeah.
Yeah, so 114,000, then, so that gives you a little more, actually a little more room to play. Now they have not addressed it, that I've seen it yet, capital gains. So I'm guessing then that means capital gains stay the same, meaning that under current rules, the tax code is that if you're in the 10 or 15% bracket, you pay zero capital gains tax. That's why it's so critical, right? That we stay at that under 100. If we can do so, if the income that you need, and this can come into how you take income in retirement as well. If we're taking it all from a retirement account, and we're taking selling some stock at the same time in an individual account on capital gains, we could potentially cause that to be taxed. Where if we did it a little differently, it wouldn't have to be taxed. You could have zero tax. Now, once you cross into the 25% bracket, up to the highest bracket, okay? So everything in between, the 25%, we'll say, starting there up to what was the 35% bracket, you were in a 15% capital gains rate. And then if you were in the top bracket, 39.6, I think, right?
Yes.
You've got
20% bracket.
20%. There we go. And now that's going to change potentially. Now, first they were talking about 3 brackets. Now we're at 4, right?
Correct. They basically did go to 4. They kept the highest, the 39.6, for anyone making more than $500,000 or $1 million as a married couple. They are still at the very highest tax bracket. But going back, you're right. I have not seen any conversation on eliminating eliminating the 0. I'm assuming it's going to be 0 for the 12% bracket since they've consolidated all those,
right,
and then jumping into the 25%, and that's an assumption, and then keeping the 15 and even the 20% tax brackets or ordinary rates depending on short or long term.
So if they stay consistent with what they're doing now, 12% would probably be 0 tax, 25, 35% would be 15%.
And 20% on the 39.6 would be, they are going to eliminate the penalty, or what we refer to as the 3.8 Medicare tax that was supposed to help pay for the Medicare, Obama insurance. Healthcare. So people that were actually in the higher brackets, or if you sold more than $200,000 as a single person, or $250,000 in capital gains, got hit with an additional tax. And also people earning more than $250,000, or 200 as an individual, 250 as a married, we had a 0.9% additional tax on your earnings.
Yeah.
Those are expected to be repealed.
All right, and we're going to get into that a little bit more, because this is one of the things under current law. There are people that are paying, if you're self-employed and everything, you could be paying over 50% in taxes.
Absolutely.
Right? Ouch. All right. Well, this is definitely going to help in that regard, as far as the new legislation that's being put out there now. So that would be a plus. I mean, half to 50 cents out of every dollar, that's crazy. But if you would like to keep more of that in your pocket, these are some of the things we're, again, getting into tax planning. Just like with financial planning, it's so critical. Okay, we're going to help you do some of that planning when we return. But before we're easy for me to say. First, we're going to take a break. Join us here. We'll be right back on the Retirement Report.
Business owners, are you doing your own bookkeeping? G'day, I'm Dr. Friday. I can save you time and money with my complete bookkeeping service. I can help you with all areas of your general bookkeeping, including payroll, business tax reporting, financial statements, bank reconciliations, general ledgers, and more. We are certified QuickBook advisors. Do what you do best, grow your own business, and I'll keep your books. To learn more about what I can do for you, call the number on the screen or visit me at drfriday.com.
The time has come to enjoy your golden years, but have you saved enough?
I'm Hank Parrott. Don't just survive in retirement, thrive. Call me today at Estate and Financial Strategies, or tune in for the Retirement Report each and every weekend on News Channel 5+.
You've been smart and saved for your retirement years, but now what?
It can be an overwhelming puzzle to see the big picture, but it doesn't have to be. I'm Hank Parrott of Estate and Financial Strategies, and I can help you thrive in retirement, not just survive.
Estate and Financial Strategies can help you maximize your wealth while minimizing your risks. Here's what we mean. To thrive in retirement, you need to maximize your Social Security benefits and your returns on investment and minimize taxes and the effects of inflation while planning for health care costs and increases in the cost of living.
Yes, you can thrive in retirement and not just survive, but you have to take that first step. Be one of the first 10 callers to my office to receive a comprehensive financial plan at no charge. This is more than just a free consultation. It's a full, comprehensive financial plan. Believe me, you can thrive in retirement. Don't just hope to survive.
Your day moves by pretty fast. Chances are you missed something.
Before you call it a night, let us catch you up on everything you missed and get you ready for a busy tomorrow. Watch News Channel 5 at 10.
Good morning. Welcome back to the Retirement Report. I'm Hank Parrott, your host. We've been talking about taxes, the new tax legislation. It's going to be a lot going on with regard to tax conversation over the next, well, basically through the end of the year. The expectation being they're going to be passing something, so it's out of the Senate committee. It's going into now debate and then doing the compromise with the House legislation, which passed yesterday. So we're going to definitely see something, it looks like, in tax reform this year. And when we're looking then, this is a great time to have that conversation about how to minimize your taxes and what the new tax proposals basically at this stage might look like with regard to how it compares to current tax law. So in one of those areas is about understanding, and both of them are still a progressive tax system, meaning that the more money you make, the higher the bracket, the higher the percentage of tax relative to your income that you're going to pay. One of the things we talked about just before the break also is about self-employed. if you're self-employed in that highest bracket at almost 40%, and you added in for the
so self-employment tax, Social Security, Medicare tax.
Yeah, all the basically for the Affordable Health Care Act, that's surtax. If you add that in, that puts you up at about 43%, and then you add in for self-employment tax, and you're up at actually about 60% potentially in tax. I was saying before the break about half. Well, guess what? It could be even up at 60%.
And that's for people without state income tax.
Exactly right. Yeah, a good point.
So then you have people in states that actually have income tax, and you've got another 6 to 10% that they could have. So those people could theoretically be paying 60 to 70% tax on their money.
This is one of those areas when you talk about small business owners and the effect that it has on them in terms of the current tax code, and they say that this is really going to be one about growth. This is where it comes in. If you think about it, if you're paying 60% out in taxes, and that's cut down to 25 or 30% going out in taxes, yeah, that extra money, you're wanting to grow your business. It's just a natural thing in business. You want to grow. You want to be able to improve and make
hire more people, possibly pay a higher wage, benefits, or even those, because statistically people aren't saving enough money, right? Even the big business people aren't putting enough money into their 401ks. They're not maximizing their retirements. And the beautiful thing is this: if you've been living off this tax code, the current one we're living in today, and let's say we do now have a feel that you're going to save 10%, 15% on your taxes, think about what you could be doing with that money. If you've been okay at this point, now you could take that and maximize a retirement, a 401k, or you could actually put it back into your business and expand, which is what they're predicting a lot of people will do. And I will tell you, most self-employed people do not put money into retirement as much as they should. They continuously reinvest in their businesses because that's where they see the reward. I mean, this is their baby, right? I mean, we can relate to a point, but I think that's what's important is in the new tax code, you're going to see more money available. Also, statistically, the IRS, the highest person that is debt to the IRS is the self-employed. So the self-employed have the highest debt to the government. So think about it, if they're able to reduce it, those individuals may be able to start paying off the billions of dollars that we have in back taxes due to this country.
Wow, there you go. See, there's going to be a lot of we're going to, in fact, one of the things I want to get into too are some of the other parts of the proposal and what impact it might have. And this is one of the things when it comes to our government, right? Great subject. So one of the things that comes with our government is that they are putting out there things that are, an example would be their Salamone part. This is one that you know, I
just saw. I never saw that the first time. This is I mean, it's fun to read these because you never know.
So right now, for instance, if someone's paying alimony, the person receiving the alimony pays the tax on alimony.
And the person giving it gets a reduction.
Okay, so if the person, now here's the thing, so we're saying, well, let's change that. Let's have the person that's giving the alimony pay taxes, person receiving it have zero tax. Well, there's a couple of things that go with that that's kind of interesting to me with regard to the government. All right, well, the premise here would be that they're helping the person that basically has less income, right? Because they're not going to have to pay any tax now, and the person with the higher income who's making these payments is going to pay the tax for them. Well, the reality is there's a couple of things there. One, yeah, it's great for the government because the person in the higher bracket now is going to be paying the tax, which means in essence more taxes for the government at a higher tax rate. Does it really help the person they're supposedly going to help though? Well, when you're negotiating on these divorce settlements, guess what? That's going to be part of the calculation. Absolutely. This is tax-free income, therefore you don't need as much, and so that person's actually going to get less income.
Well,
here's the other piece.
You're missing out a whole exemption.
Higher bracket is at 30% tax, let's say a tax rate, and the other person was at 10%. Well, they're going to adjust that income down by 30%, not just the 10. So then in reality, the person they're supposedly going to help gets hurt because they end up with less money than they would have otherwise had after tax. Right. And this is one of the things when we get into these, you know, comparisons and all the different, you know, how it's going to affect different people. And again, this is still to be negotiated.
Absolutely.
But that's one of the areas I see so commonly. It was the same with healthcare legislation, supposedly in helping people get more, you know, more people get insured. Right. Well, the reality is the kind of insurance that's being offered is not that great. high deductibles. You know.
Yeah, I mean, normally it was just going up so fast for those same people that couldn't afford it in the beginning, got into it, and then after the first year, it almost doubled. And at that point, they're like, I can afford the penalty better than this, which of course the penalty was supposed to be a way of using to help pay for this whole process. And so you have the penalty. And I do want to put out there, in 2017, as of this moment, the penalty still exists. Yeah. I get probably emails, 10 or 12 of them a week.
It's going up,
and,
right?
And it goes up, right, every time. And I don't remember what it was at this moment, to be honest with you, but there, just so you know, and if you have filed your own personal taxes and there was a box that says, I don't want to disclose, you had a choice. In 2017, they will not accept your filing. You have to respond, do you or do you not have health insurance?
You know, this is one of those areas with regard to health insurance. I have talked, you know, I've had clients come in, new clients come in that are talking about that piece. They're rather, you know, they'd rather pay the penalty than to buy insurance that they see is, you know, offering very little as far as coverage and everything, catastrophic type plans. That if you think about it, well, how does that help the person? The reality is this, and this goes again to these unintended consequences to me. Person saying, well, I've got insurance now. Well, great, but I can't, it doesn't really pay for anything until I hit $5 grand or whatever it might be out of pocket. Well, for people that don't have any money,
$5 grand might as well be $5 million. I mean, it's the same thing.
To them that still have no insurance in reality. And what happens if they did have a catastrophic? Do they really care? Are they going to actually pay that money? They don't have any money. Are not going to pay anything. They're going to be written off by the providers that have given them that care, the doctors, the hospitals, and the like. So what are we really accomplishing with some of the legislation? That's part of that. You know, I'll get off the soapbox a little bit here, because this is maybe this is just understanding when you're looking at these things. What's the value to you? What's the real benefit? Okay, so here's something though. Let's bring it back to something you can use, and that's on this tax stuff. When we're looking at, we talked about the progressive system. We talked about the 15% bracket. So an example will be if I've got clients, all right, or clients that I work with currently, in fact, that maybe we've got a gap, maybe we've got an extra $20,000 that we have, that we could make, or if you will, before crossing over in that 25% bracket. Well, at 15%, then this might be a great time. Then it's going to be the same under the new legislation where it's posed. We're going to be looking at the same thing. We don't want to cross over into 25%. We want to keep into 12 at that point. How do we do that and just pay that amount of tax? Well, that's where a Roth conversion may come into play. All right, or capital gains again. If we're looking at maybe pruning the portfolio to be able to reduce taxes for the, you know, for future use. This is a great way to do that. We can do, you know, take out 20,000, sell off 20, you know, have 20,000 in gains, and in this situation, if we stay in the 15% bracket, guess what? Awesome. Zero tax.
And capital
Why
gains.
wouldn't we do that?
Right.
Okay. In the future, as you start taking income out more, this could be a huge benefit to you as far as controlling your taxes in the future as well. And that's the other. Always looking not just for now,
but in the future, right? The future. And that's what I say. I have quite a few people that call the radio show, and the one big thing is, well, I don't have to file taxes, right? I'm only on Social Security. But one of the things you want to double check, yes, you may only be living off Social Security, but you may have an IRA or a 401k or stocks or whatever that are sitting there, which could be converted free, zero tax dollars. So whatever it's worth today, you may actually be able to convert it, put it into a Roth or a money market or whatever your financial person suggests at that point. You might not need the money, but when someone inherits, it's going to come to them particularly tax-free. Or if you do need the money, instead of grabbing out big chunks and then putting everything taxable, because now you're in a frantic, oh, I've got to do this, you turn around and do it. So I think a lot of people miss that window of conversion because they don't need it, so they're just not touching it.
And this is understanding that this is so true, understanding your own specific situation. Do you have you may be saying, well, I'm doing pretty well as far as taxes, but you're passing up. You could still be doing pretty well.
Exactly.
And you could set things up to where less tax in the future, either for you or here's another one. If something happens to you and you haven't used those taxable dollars and they go on to your, you know, are passed on to your children,
guess what?
This could be a big benefit. If it's passed to a surviving spouse, guess what? You just had a compression of in half of what we've got to work with regard to income and these things as well. So when we come back, I'm going to, you know, I meant to get out. In fact, let's do it real quick. First 10 callers to my office, 615-376-5325. Tess is standing by to get your information. If you'd like to get your own personal tax plan of how to reduce taxes for you, keep that money in your pocket. This could be worth tens, maybe even hundreds of thousands of dollars to you over your lifetime, this type of planning. All right, it's yours for the first 10 callers, 615-376-5325. Tess is standing by. She'll send you out a packet, a checklist of things to bring to your appointment with me. We can have Dr. Friday meet us as well. So if you wanted to meet the two of us, we can arrange that. In addition, when you come in to see me, I'll give you a free copy of my book, 7 Steps to Financial Freedom in Retirement. All right, we got it out there. First 10 callers, and now we're going to take a break. All right, join us here. We'll be right back on the Retirement Report.
The time